Bitcoin takes a breather after Doji Candle in a cautious pre-Fed de-RiskingBTC takes a breather after an indecisive Tuesday, as the Fed is expected to cut rates Wednesday while signaling slower easing next year. By Omkar Godbole, edited by Parikshit Mishra, December 18, 2024, 6:19 a.m. UTC. Bitcoin, BTC, is taking a breather, experiencing selling pressure after Tuesday's indecisive price action marked by a Doji Candle. This seems to be a classic case of traders de-risking in anticipation of an expected hawkish Fed rate cut later Wednesday. The leading cryptocurrency by market value traded around $103,750, marking a 2% drop for the day, according to TradingView and CoinDesk data. Prices had surged to a record high of over $108,000 on Tuesday, but failed to maintain those gains, ending the UTC day flat. That formed a doji, a candlestick pattern that signifies indecision and potential bullish exhaustion when seen at record highs. Powered by 00:04/12:02109.2K0, the Fostex ecosystem, creating the one-stop Web3 shop. STLP0 fill. Hashtag FF3E5F. .ST1 fill. Hashtag FEF.ST2 fill. Hashtag FF3E5F. Share.CLSX. 1. Isolation. Isolate. .CLSX. 2. Fill. Hashtag FF3E5F. .CLSX. 3. Fill. Hashtag FFF. Next day story continues below. Don't miss another story. Subscribe to the Crypto for Advisors newsletter today. See all newsletter. Sign me up by signing up. You will receive emails about CoinDesk products and you agree to our terms of use and privacy policy as expected. Bitcoin's decline has resulted in even larger losses for alternative cryptocurrencies. But some majors such as XRP, SOL and ETH are experiencing losses comparable to BTC. The Fed will announce the rate decision, the interest rate plot projections, and economic forecasts at 1400 hours Eastern Time. Fed Chair Jerome Powell's press conference will be held a half hour later. The consensus is that the Fed will cut rates by 25 basis points to the 4.25% to 4.5% range, marking a total easing of 100 basis points since September. But the dot plot is expected to show fewer rate cuts for next year. The risk of slightly stronger near-term growth with the threat of higher inflation tariffs putting up prices of goods and immigration controls potentially lifting wages and costs in the likes of agriculture, construction and hospitality sectors, means that we expect them to signal only 3 rate cuts in 2025. Previously, they had suggested 4. Analysts at ING said in a note to clients, "We look for 25 BP of cuts per quarter in 2025 with a terminal rate of around 3.75% in the third quarter." Analysts added, noting the possibility of the Fed revising their projections for economic growth and inflation. These so-called hawkish expectations are likely fueling the de-risking in the crypto market that is looking for reasons to correct, having seen prices for BTC soar from $70,000 to over $100,000 in less than 2 months. It's important to note that fewer rate cuts do not necessarily mean tightening. Easing is still on the table. This suggests that the path of least resistance for risk assets remains tilted toward the upside.